Radhika Rao is the senior economist and director at DBS Bank, now joining in on the show. Good to have you on board. Do you think that this time around this hawkish stance as well will continue because a pause really seems to be priced in?
Certainly. I think we'll have to, the central bank to its benefit has been very, forthright and prudent and forward-looking, I think, in the past few reviews, consistently maintaining a very hawkish language. They might not have necessarily moved on the benchmark rate, but I think they have signaled their hawkishness by stance, by, just like the previous reporter was mentioning, that they've also done a few liquidity tweaks, which have kept, which has reinforced their overall hawkish underpinnings. But we don't expect, any move on the policy per se. So their commentary on what is the way forward will be very important, because we do recollect at the last review, they had mentioned about wanting to, consider OMO bond sales. And since then, we haven't really seen that pan out. But the secondary market, we have seen some, but not so much, on the primary. So it'll be interesting to watch what their commentary is. Apart from just the policy per se, I would think that their growth forecast might be upgraded as well after what we saw in the second quarter, which was, which exceeded even their most bullish forecast, not only from the street, but also what the central bank had anticipated.
Sure. So, Radhika, given that context of beating the estimates on the street, do you expect RBI to probably increase their growth outlook for the year? And what about inflation? Because while there was a bit of semblance of a downtick in the month gone by, it seems like it's likely to go up in the month of November, December.
Yes, certainly. On your growth number first, we do think that there could be anywhere between a 40 to 50 basis point, upward revision in their growth forecast, which is at 6.5%. So it could be, 6.8, 6.9. And if they're still expecting a bit more bullishness in the second half of the year, they could take it to 7 as well. On the inflation front, I don't necessarily see a big need to change as yet. The quarterly profile has certainly been very choppy. Like you rightly mentioned, the quarter that's gone by, we saw 3 months successive deceleration in inflation readings. And as base effects recede, you're going to see, the GDP, the inflation number that comes out next week, perhaps head closer to 6%, thanks to some of the vegetable prices as well as cereals and food grains. And that had led, an announcement just some hours back on the onion exports as well. So I think supply side measures are likely to be taken. Insofar as forecasts are concerned, I would think there's a higher likelihood of inflation being left as is, along with their cautious commentary on how food is panning out, while at the same time you're going to see growth being upgraded by a little.
We were talking about perhaps the possibility of outside policy announcements being doled out by the RBI governor this time around. Is there an expectation of that?
Outside policy announcements, I would think that if anything, that could be more to do with macroprudential measures. We saw that consumer credit risk weights being tightened a few weeks back. Those and what that tells you is that while they keep the policy rate unchanged, they are keeping an eye on where there are macro excesses in the region or in the financial system. They have mentioned quite a bit about the unsecured loans and asking financial institutions to be a lot more cautious of what their exposure is to this particular segment. And I think they followed up that rhetoric by tightening policies. And I think so those kind of announcements could come outside of the policy meeting. But I think anything on liquidity and anything particularly on the policy rate front, I think will, that urgency to do something in between reviews has certainly gone down. And now that even global factors in a way have stabilized, especially the Fed, there is a larger conviction now that they have, the rates have peaked there, with the discussion here forward on, where they're going to take, how fast they're going to lower rates.